Stealth wealth be damned. Big, shiny logos. That's what we love, particularly in real estate, which is what we turn our attention to now. Richard Waind is the Group Managing Director of Betterhomes, and he's with us in the studio. Morning, Richard.
Good morning, Richard.
Your latest report for 2023 is out. We'll get on to 2024 shortly. But first of all, the year that was, confirming what I guess we already knew. In your words, it was a stellar year. All-time high for transactions.
Yeah, correct. I think this has probably been fairly well accepted in the marketplace. Last year was very, very busy. Transactions in the residential market about 120,000, which is about 38% up from the previous year, which itself was a record in terms of transaction numbers. So it's very, very busy in Dubai real estate.
410 billion dirhams worth of deals done last year across Dubai. So not only the volume of transactions up, but bigger deals as well. You'd expect that with sale prices rising, almost doubling the value of transactions. I mean, you've been in the real estate business for 20, 30 years in various countries now. That doesn't happen, Richard. Doubling from an already record year, not from a low base.
Yeah, look, I think there's two things. One, there is the volume of transactions that happened, which, as I say, was nearly 40% up. But then it's both the size of the deals, so the size of the actual properties being sold is increasing, and then the value of the rest, so the value of the general market's also up about 20% last year. So prices increased in the sales market about 20% as well. So you combine that all together, and the value of transactions was nearly double.
Right, let's think about who is buying in 2024. Let's have a listen very briefly to Hussein Sajwani of Damat Properties. He was speaking a few days ago in Davos about the Dubai real estate market, chatting with the guys at CNBC. Have a listen to this. This is what he had to say about nationalities.
India, China, Europe, Russia has slowed down. But other countries are coming in strongly, especially Chinese coming back.
Is that what you're seeing? Russia slowing down a little bit is what Hussein Sajwani had to say, but China coming back quite strongly.
Yeah, so look, we saw last couple of years we've been very, very busy with Russian investors. That slowed down a little bit through the second half of last year with the weakness in the ruble. And we saw a lot of Russians actually selling properties in the last part of the year. But, the Russians were never the major part of the market. Our biggest buyers have always been Indian nationalities and then Brits. Russians for us were coming third last year, and we've seen lots and lots of different nationalities taking their place, including the Chinese investors. In really sort of in the last quarter, we started seeing Chinese numbers coming back in some volume.
So what about 2024? Mr. Sajwani thinks it will cool down a bit. He says we might see 5 to 10% growth this year, but he doesn't expect a repeat of 2023. What are we, 21 days in? What are you seeing?
Yeah, I'm gonna mirror him, actually. I've said between 5 and 8% in terms of price growth. In terms of transactions, I think we'll be there or thereabouts. There's lots of new launches coming into the market, but prices have got to a point where there's a little bit less heat around buying, but there's still plenty of interest in the market. The first couple of weeks of the year have started just as the last few weeks finished last year. So if we then run that ahead, I think we'll have a very similar year as we had last year. But I don't think we'll see the same increase in prices that we saw last year.
A lot of people have, for the last few years, been predicting the end of the Dubai real estate boom, myself included. About 18 months ago, I thought, well, rising interest rates, that's going to be the thing to kibosh the boom.
Yeah,
that didn't happen, and now we think interest rates. Well, the next move is going to be down, isn't it?
Well, look, we've had headwinds, we've had the strong dollar, we've had higher interest rates, and the market's just blown through those. And I really think that's a story of population and the success of Dubai over the last couple of years and the momentum Dubai's had. Now, I think that momentum and success is going to continue, so I think demand will continue. We've got a little bit more supply coming to the market, and it's that supply that will probably just take the heat out of the increase in prices that we've seen last year. And it's the supply increase that I think will be why we get prices more at a reasonable level, around 5 to 8% this year.
I was looking for some doom and gloom about the Dubai real estate market. There's not a lot of it out there, but there's some.
Go on.
Arabian Gulf Business Insight had a headline last year. Could the Dubai property market meet its nemesis in 2024? Standard & Poor's, S&P, say they expect a cyclical reversal this year. Nothing major. We don't expect a profound market disruption, but we do expect a cyclical reversal. Then you have to go to the YouTubers to get some proper doom and gloom and social media. Alex Gorosev says, the Dubai property market crash has already started. but he's got 7,000 followers on YouTube. I'm not sure we can take him as gospel.
Well, he's got a few more thousand than I have. But look, it certainly hasn't started. I think there is, there's a little bit of a normalisation happening in the market, which is great. But other key things in the market. So last year, we saw a record percentage in Betterhomes of the number of end users buying, for example. It's up to 44%. That's up from 29% 3 or 4 years ago. The reason why that's important is the more end users we have, the more homeowners we have in the market, the more stable a market is long term. Because if prices do start to go, unlike investors who can just liquidate and move away, homeowners tend to stick and hold, and that gives market stability. That gives it a bit of a natural handbrake should anything happen. But I really think you've got to look ahead maybe 2 or 3 years when there's a lot more supply coming to the market for anything that could be material to impact the market conditions at the moment.
Finally, Richard, are we still cheap? You heard me banging on about Paris hotel room rates. I was there this weekend. Per square metre, because the hotel rooms are so small, they're very, very high. Where do we stand? You've crunched the numbers. Prices per square foot of real estate. Dubai against Paris and also London.
Yeah,
Where do we stand?
I was furiously Googling in the green room, so I've got a few numbers for us. So London house prices last year, price per square foot, central London, £691. That's about 4,650 dirhams. Paris, $1,133, so about 4,161 dirhams. The UAE is about 1,300 to 400. So we are just under 4 times cheaper on a price per square foot basis.
Good to know. Richard Waind from Betterhomes. Always appreciate your time. Thanks for getting up early to speak to us today. Group Managing Director Richard. Thank you very much indeed for your time and also for your Chief Executive.
Thanks, Rich.
By 103.8.
Join the conversation.